Welcome to another week of our Forex Trading School. In this week, we are going to be looking at fundamental analysis. Before we could teach this topic, in our just concluded videos, we looked at liquidity, stop hunt, volatility, and other block, as well as block trade. All of these topics that we are treated before this fundamental is going to help us to understand fundamental analysis even better. In week 7, lesson 2, we discussed the 3 different types of analysis that we do in the Forex market or in the financial market before we can make a decision to invest. And the 3 types that we mentioned are the fundamental analysis, the technical analysis, and the sentimental analysis. We have been able to treat technical analysis by looking at what strategies that day traders can use and swing traders can use to remain profitable in the financial market. So today, we're going to practically be looking at fundamental analysis. What are fundamentals? When you say fundamentals of a company, what do we mean? Fundamentals are simply factors that could be considered as important to the understanding of a particular business. Fundamentals are factors that could be considered as important to the understanding of a particular business. For instance, if you want to understand the performance of Hard Solutions Limited, first thing to do is to look at the books of Hard Solutions. You want to understand how healthy is this company. Should I invest in their stocks? Should I buy their stocks? What you need to do is that you need to look at the income statements of Hard Solutions. You look at fundamentals like the earnings. You look at fundamentals like the revenues of the company. Then when it comes to looking at the fundamental of a country, you look at fundamentals like unemployment rates, interest rates, and so on and so forth. So now, what is fundamental analysis? So fundamental analysis simply means what? The use of fundamentals as an investment strategy. Now, there are 2 types of fundamentals that we have. We have the quantitative fundamental analysis and the qualitative fundamental analysis. Quantitative fundamental analysis analyzes an investment according to easily measured factors, such as the earnings or assets of the company, okay, that issued the stock that you are interested in. Those numerical fundamentals that you can easily look at the figures and say, okay, this company is in profit, they are in loss, they are doing well, they are not doing well, they have investment, they have assets. Okay, those things you look at that you can quantify. Okay, when you use those things to make your investment decisions, you say that what you are doing a quantitative fundamental analysis. Now, when we talk about qualitative analysis, this is a harder part. Now, qualitative analysis looked at harder to measure factors, those factors that you cannot easily measure by number, no figures that you are using to measure them. Now, if you want to measure the quality of a company's management, how do you do that? You need to begin to look at the attributes of the staff, their behavior, and all of that. That is, you are basing your investment decisions on qualities, say qualities of humans, right? Or you are looking at the strengths of its brand. How do you measure the strength of a brand? There is no measurable factor that you can use, but you can begin to look at certain features and performances of that very company. While looking at fundamental analysis, we consider both the qualitative and the quantitative fundamental analysis. All right, then what are the difference between fundamental analysis and technical analysis? It's simple. Fundamental analysis looks to see whether an investment is overvalued or undervalued based on underlying economic conditions, as well as the finance of the company or other organization that issued a stock or a bond. So when we look at fundamental analysis, we're trying to use it to make a decision that, okay, maybe this company is overvalued, right? Or maybe is undervalued. So if it is overvalued, I will now wait to see a discount to the real value or the actual value of that very asset. Then if it is undervalued, then I'm looking at, okay, if this company worth more than this, then I'm looking at what the price of maybe the stock of this company will soon shoot up. So that is what fundamental analysis tend to achieve. Technical analysis instead looks at patterns in the price of an investment to predict future movements in that investment price. You simply look at your market structure, higher high, higher low, higher high, higher low. You use it to make decisions, right? Some persons would argue that fundamental analysis and technical analysis do not move in the same direction. But I believe that fundamental analysis and technical analysis, they go hand in hand. Why did I say this? Let's do it practically here. You can see that since gold started making this move, we have higher high here, higher low, okay, higher high, higher low, higher high, higher low, okay, and then we made higher high, we have higher low, and then now we have just made a new high. In between these areas where we are making a consistent higher highs and higher lows, there are fundamental release or fundamental data release. There are economic data release. There are FOMC news there. There are inventory news there. There are unemployment rate data release inside this zone. But yet, we are making series of higher highs and higher lows. Do you get this now? It is important for you to note this, that fundamental analysis, the impact of news, mostly affects just the day traders. Someone who is a swing trader or position trader may not necessarily pay attention to news, especially when the market is now trending. I can pay attention to news if I'm trading reversals, for instance. Market has been on an uptrend and I'm waiting to see it reverse. I can pay attention to news because news will help the market move faster and achieve a particular structure that's supposed to have been achieved over time. But then it will not interrupt with the market's structure. Remember that we treated other block where we looked at the block trade, and we said that what it is the big institutions that create these other blocks that we are looking at. So, and then we established that what when these big institutions put their money, we usually experience a big volume in the market, such as this. Here we have the presence of big institutions around the zones. So anywhere you see big volume, that is to say that what a blockhouse has launched a trade. Now let's practically go and see one news for the sake of this lesson. Let's know, how do I trade news? Okay. I told us in week 7, lesson 2, that each time there is a news release, that you will see it in a lot of apps like investing.com, Forex Factory sites, FX Book. All right, these are websites and mobile apps. We're going to go to investing.com. So this is my Google, and I will just come and type investing.com. As a Forex trader, every day you wake up, you need to go and check if there is any high impact news, and then you try to align yourself, know when there is going to be what? High movement of volatility in the market. So when you enter investing.com, you simply go to economic calendar. You can see it here. I click on it. So it gets you here. I'm going to change my time here to Lagos so that it will align with my local time. I'm going to check on NFP news. We have a lot of economic data released. I will not be able to touch all the news that is being released in the Forex market. But hopefully, in our mentorship session, we are going to do justice to the news and their meanings and how they impact our investment decision. The previous NFP news was released 8th of March. So let's look at 8th of March, apply, and see the news for that day. So quickly, let me recap that on your economic calendar, you will see time, currency, that is the time that the news will take effect, the currency that the news is going to affect. Every news will not affect every currency. So you will choose only news that have impact on your currency that you are trading. So you look at what importance, the importance of that news. 1 star means what? Low volatility expected, as you can see from the color that dropped. Then this 2 stars means moderate volatility expected. Then look at 3, high volatility expected. That is to say, anytime you see news with 3 stars, you pay attention to it. All right. So then the event is telling you what data that is being released or what qualitative or quantitative fundamental analysis that is expected. Then actual forecast. Before the news release, the financial analyst must have forecasted ahead of time, and then at the time of the news, that is when you will receive the data of the actual fundamental that is being released, and then they will also show you the previous. So let's get to NFP news. Assuming that we are trading USD pair, we can see the NFP news right here. The time of this news release was 1:30 Nigeria time. As you can see, it will affect USD pairs and then is of high impact. Before the news release, this was not here. This will be vacant. This is the forecast. Forecast is 198. Now you will simply click on the news. So you can see the information about the news. March 8, 2024, that is the latest release, actual 275,000. So non-farm payroll measures the change in the number of people employed during the previous month. NFP news captures the data of February, even though that it was released in March. Okay, so excluding the farming industry, that is non-farm. That is why it is called non-farm, excluding farming industry. Job creation is foremost indicator of consumer spending, which accounts for majority of economic activity. Then they will also tell you in this app or website how to interpret the news. A higher than expected reading, expected is the forecast. If a higher than expected reading is released, that is, if the actual is higher than forecast, just as we saw that when the news was released at 1:30, this data was released, we saw that 275,000 is greater than 198,000, which is the actual. So they say that this reading should be taken as positive or bullish for USD. That is the US currency, dollar. It will be an indicator of strength to the currency. Why a lower than expected reading should be taken as negative or bearish for the USD. That is to say, if we have something like 190,000 here, when the news was released, this is going to weaken dollar. So now, what do I do when this news is to be released? I will wait for this news to be released. And when it is released, I will now go to my charts and check for possible stop losses that could be haunted by the big guys with their block trade. Now, let us go and see. Did this news actually strengthen dollar when it was released? Let's go over to the charts. Pardon me, we have to go to a pair that has USD. This is gold euro. Okay, so let me go to USD JPY. This is USD JPY. Let's check 8th March. So I'm just going to find 8th March. Here is the date. So this is 20th March 2024. So let me go down to 8. Okay, I'm in 8 now. This is daily time frame. So one candle represents one day. So I will go down to hourly. Why am I going to hourly? So that I can find the news time. Remember, it is 1:30 Nigerian time. So this is 8th March, 12 o'clock. I'm looking for, okay, 13 is 1 o'clock. So I will need to go down to 30 minutes so that I can get 1:30. All right, so this is what happened, exact time of the news. I'm going to be teaching correlation of pairs in the next video. And you need to understand that USD is actually USD index. That is dollar index, which is what this pair, look at this pair here, USD index. I only use it to, know what is going to happen with all the pairs that has USD at the right-hand side. Whatever thing that happens to this index, that interpretation of news will be positive. If it is positive for this index, it will be positive for all the pairs that have USD by their left-hand side, okay? Because we don't trade pair, we actually trade currency, all right? You are trading this currency. If USD is in your pair and is at the left-hand side, it means that what you're actually trading is USD. Like I have USD JPY here. Okay, we are currently in USD JPY, as you can see. You are not trading USD JPY, you are trading USD because you are just using Japanese yen to buy USD. USD is what you are actually transacting on. So when we talk about a news being positive for USD index, it means that it will be positive for all the pairs that have USD by their left-hand side as the base pair. So since the news came out positive, whereby actual is greater than the forecast, so we expected that what this news is going to cause our USD JPY to have a bullish move at the time of news release. So we can see from that time to the next 1 hour, USD JPY was making a bullish move. 1, 2, 3. We had a bullish move. That is USD gained value because of what? NFP news release. But generally, did this news change the structure of the market? Did it go against technical analysis? Let's look at this. Before now, we had made this low here. We made this low here, we made this high, and then we made this low, and then we made this high. So this fundamental that happened in between here did not alter our technical analysis. All it did was it took the stop losses of traders that are here. Let me show us. There was stop hunts. From here, this was the time of news release. So some person's stop losses were here. The news quickly took it out and then went down. But it did not change the market structure. It did not go against the technical analysis. So that is it for fundamental analysis. I would advise you, because we said in our last lesson where we talked about volatility and liquidity, we said if you want to trade, you need to trade less volatile markets. You can allow news hours to pass and then you get into the market. Let me show us a typical example of what I do when there is a news release. As long as I know my high and I know my low, and then there is going to be news release inside of this place, I don't care about what happens. Remember that this is a low only after we've made a new high, right? So when I'm placing my trade inside here, whether there is news release or not, my SL will definitely be here. That is the low that gave birth to this high. So I am not affected by news as a swing trader because I place my trade and I place my stop loss where it should be based on technical analysis. But if you are a scalper, intraday trader, you will be affected so much by news. But what I would advise you is whether there will be news released or not, follow your technical analysis, place your stop loss at the right place. You saw that what? There are people that have placed their stop loss around this region. Maybe people that think that, oh, this market is going to sell, their stop losses are here. And the market quickly came, hit them, came back for retest, and then started going up. Also, there are people that their stop losses are below here. These are people's stop losses. These are people's stop losses. These are stop losses. Okay? There are people that their stop losses are here. People who started selling thinking that this market is going to sell down. So market came back and hit them out. So there is always going to be stop loss hunt to initiate volatility in the market. But the best way to have an edge or outsmart the market is to place your stop loss where it should be. I always use 4 hours time frame to place my stop loss for my medium swing trading strategy. Then in another account, I use weekly time frame candles to place my stop loss or to trail stop. All right, that way you are not affected by news impact. News impact does not exceed 1 hour in the market. All right, so if you are not sure about your market structure yet, where to put your SL, I've done that class and I did justice to it. Go back and watch it. But if you are not sure, just allow the news to do its thing for that 1 hour. And then you see clearly, and then you join after the block trade has been executed in the market. All right. Now, let me give you this final tip. Whenever you see the market moving in this way, that is consolidation. You know that what? These are stack of stop losses of retailers that will later be haunted by the big institutions. So you don't want to trade inside consolidation. You want to see the market break out or break down and then retest before you make your entry. So most time before news, you will see moves like this because it's only retailers that are trading at that time. The big guys are waiting to leverage on news to move the market to cause volatility by hunting all the stop losses of retailers who had gone into the market earlier before time of the news. So have this in mind. If you are going to keep trading inside traffic, inside consolidation, you will keep falling victim of what? Stop hunting. Look at here. Somebody who would want to place trade, remember what we did? This is where the big institutions will return, okay, because we had an expansion here. But then people were already buying here. These are all stop losses of people. Finally, what did the market do? The big guys came, pushed price down before going on. Were you wrong to have bought here? No, but you bought into traffic. These are all retailers. And then the big guys came back into this other block zone, filled their order, and they still moved in your direction. So you must learn to wait for the big players to show direction or to give direction in the market before you get into trade. So that will be it for fundamental analysis on charts. There are some that you may not have a news release on in terms of data. That is the qualitative. If there is war somewhere, there are crises, election, all of that. This will impact the volatility of the market. No, but it left for you to use your intelligence to know how such thing can impact the pair you are trading or the currency you are trading or the stocks that you are trading, right? Otherwise, if you understand market structure, stick to your market structure because 99% of the times, fundamental analysis will not contradict technical analysis. In our next class, I'm going to be teaching us correlation of pairs. What correlation of pairs helps you to achieve is your risk management in terms of portfolio diversification. Some of us will think by trading GBP, JPY, and GBP, USD, you are actually diversifying. Let me place these two trades so that when one goes wrong, the other one is going to make me money. You need to understand correlation that these two pairs, they will most likely move in the same direction. So if you are losing here, you are also losing here. All right? So that is it. See you in the next video where we'll talk about correlation of pairs. It's a very, very important concept that can help you in the confirmation of your investment decision as well and risk management.